Thank you for joining us in short notice. This is episode 9 of the On the Brink podcast. And today we've got some guests with us. I'll give them a chance to introduce themselves. Thomas Egan and Kate Baucherel. Why don't you guys introduce yourselves before we tee up the topic?
Sure.
Kate.
Okay. So I'm Kate Baucherel. I'm based in the UK. I've been working with blockchain and crypto since 2015, but my background is in accountancy. I'm a fellow of the Chartered Institute of Management Accountants, so I look at everything through that lens of having had a 25-year career in finance. And yeah, that's me.
Okay. And my name's Thomas Egan. I'm an accounting advisor based in Geneva. Currently, I'm working in the aviation industry, but I previously worked in the banking industry and actually have some experience in the bankruptcy courts early in my career when I worked for them.
Excellent. Well, welcome. Okay. And everybody knows Jason Meyers, Lead Architect at Auditchain, on with us again. And Jason, the saga continues with this FTX debacle and now bankruptcy. So we've, brought on Thomas and Kate to help us sort of understand what do you think is going to have to be unwound. Apparently, there's over 100 plus entities involved in possibly having to deal as creditors. Give us a sense, Kate, of what do you think is the judge is going to have to deal with this bankruptcy?
Well, I mean, it's huge and complex. I mean, the structures that have been built up around this exchange and the companies that are around it and the different interests are complex enough. And then we've got to factor in exactly what was the chain of events that led up to this collapse. Where was money transferred to and why? Did they have any right to transfer money? Or what were the actions after liquidity became a problem? There's all sorts to answer around withdrawals that were made easy for some people and not for others. It's an absolute mess.
Yeah, and Jason, I think CZ had tweeted something about the 2 lessons he had learned, where it's like, the fact that they had used their own token and that they had collateralized and provided loans using their FTT as collateral. I'm sure that adds more complexity versus what would be a typical bankruptcy in this space.
Well, let's correlate it to traditional finance, right? Y'all remember when Bear Stearns went down, right? Bear Stearns had $300 billion worth of inventory on its books because they made markets, a lot of them. And a lot of that inventory was collateralized mortgage obligations that they themselves made, right? And then there was a memo that was circulated by one or more investment banks that said, don't trade if Bear Stearns is 1 or 2 steps removed as a counterparty. So what happened was the only market for the securities, in this case, a token that existed, was made by the investment bank that created the products. And in this case, FTX created this token. They Alameda made a market for the token, right? That wasn't disclosed, right? Under SEC law, affiliated relationships and related party transactions are always disclosed. And they're factual statements. There's no spin. They're written by lawyers. So when you create a token, you make a market in the token, and then that token becomes the subject of using it as currency and collateral for loans. Making loans with that token could have occurred. We don't know yet. We'll see. Bear Stearns created securities. They were the only market maker for those securities. There were other market makers, but other stock making markets for those securities that caused the price of those bonds to go down. In the case of the FTX token, Alameda was the largest market maker for it. There were other market makers, but not as active, right? And then they started using that token to collateralize loans. Maybe they made loans with that token. I know Scaramucci was explaining how part of his deal where he accepted an investment from FTX was they would put some of the money that was invested into crypto, a portion of which was the FTX token, right? Which he said that, he's going to take a loss on. So, what CZ said was never use your own token as collateral, right? Because if somebody wants to kill you, they kill the token and then they kill you, especially if that token is the subject of a massive amount of affiliated relationships and related party transactions, in addition to the counterparties who were part of those transactions where that token was the subject, right?
Yeah.
And in the real world, or the traditional finance world, all this stuff is disclosed beforehand. Affiliated relationships and related party transactions are literally titles on a form that you file with the SEC when you articulate financial disclosure.
Thomas, what are your thoughts on what you've observed so far? I'm sure from an accounting and auditing perspective, it's going to be such a morass to navigate.
Well, it's complicated by the fact that this is not a normal company. Nor a normal company that goes into Chapter 11, it's there to restructure its debt. And essentially the shareholders are going to probably be wiped out. And then the creditors are going to form a committee and essentially take some form of haircut or some sort of a equity for debt swap in exchange for their existing debt. Now, I don't see this happening all that much here because this is an exchange. And so your big issue is the custodial assets that are there. And I think that's why they're in Chapter 11, is so that the custodian now, or the administrator, I believe the administrator they brought in actually handled Enron. So they will now look to have an orderly distribution of those assets back to the owners. But that's still, and I'm not a crypto expert, but it appears to me that there is a fraud within a bankruptcy here. So, this is going to complicate the case. And I think for the judge, all of this is novel. There is no playbook for this person to use. This is all first time. So it's going to be very interesting.
Yeah.
And Kate, it seems there's been a lot of talk around the fact that there doesn't appear to have been a CFO or a formal board or I mean,
there's no audit committee, no
governance
finance committee.
Governance appears to have been slack.
Yes, to say the least.
And there's an attitude that I thought we were managing to finally stamp out, which was crypto is the Wild West and nobody's watching, whereas all the regulators and all the tax authorities are as good at reading a transparent ledger as the next man. So they know exactly what's going on with all the different crypto firms. And there is a certain attitude of, we'll just try it, and if people come, then we grow. And they're not putting structure in, not putting proper growth plans in. And I sincerely believe that by imposing requirements for transparency and imposing requirements for certain aspects of reporting, we would have some much better grasp of what's going on. And most importantly, people would realize that everyone is watching, and we need the governance to be there, and we need that people to be answerable to the consumers that they are dealing with.
And Jason, I mean, it's one thing for retail investors to be sort of not have the full picture or not even do due diligence. but this company appeared to have some pretty sophisticated, venture investors. What do you think, it was that they were looking at that? I mean, the company was at a 32 billion valuation, I think. How is it that we're here? What do you think they saw? Were they hoodwinked by sort of, a genius? Apparently, there's a story about, one investor having a meeting with SBF, and he was playing, a video game while in the meeting, and after that, they made the decision to invest. I don't know if that's just lore, but I don't know. It seems like there wasn't a lot of due diligence around the model.
It baffles me that, and these are the world's most sophisticated investors. Now, keep something in mind. They didn't allocate a large percentage of their assets under management.
Right.
But still, they're the most sophisticated investors in the world. How they were talked into making and allocating capital is, I don't have an answer. I'm dumbfounded. I'm dumbfounded. I mean, if you look at what we are all about, maybe we're the only ones thinking about financial disclosure. Maybe we're idiots. Maybe I'm an idiot. It's possible I'm an idiot. I always say I'm either very smart or very dumb. We're going to find out. But when you look at the world's sophisticated investors who have poured massive amounts of money into this, without any governance, without a CFO, on the word of the single guy, it makes you wonder. And that's all I can do is wonder. I will wonder forever. I'll never get over this.
So what do you think? Sam Bankman-Fried has stepped down, and there's this new CEO, John J. Ray. What do we know about him? What do you think he's walking? What is he walking into?
Well, that's the thing. What do you know? What is going through the mind of a guy who's walking into the militarized zone in North Korea?
Well, apparently this is not a new thing for him. He had dealt with the fallout of Enron. So maybe he specializes in...
Enron is a joke compared to this. I mean, that's like, what is that? That's like a candy store filing for bankruptcy compared to this.
Yeah, and Enron was you had all of the financial reporting standards sitting above Enron. You've got points of reference, whereas here you've got deep complexity in the number of organizations that are involved, the number of entities. You don't, I mean, in terms of the jurisdiction, some entities may be extraterritorial as well, so there's complications there. They're talking about 1.2 million creditors just on the retail side, and there is no accepted, although in real terms all frameworks are flawed, but there's no accepted framework for that type of entity to be reporting. So it's really going into the dark.
Tom, I haven't heard about the existence of an auditor or even a compiler of financial results in any of this. It's not being talked about at all.
Yeah, neither have I. And that seems to be the concern that I have. It's the lack of transparency, which now a number of the cryptos are coming out saying like, well, they believe that there should be transparency around reserves.
Yeah.
And I'm like, well, it's a little strange that you got religion today. I mean, you've been around for a while. Why didn't you provide that transparency already? But then even with whatever transparency might be there, the thing is there's no validation of it. There's, where is the auditor? And the fact is these are not regulated, so there is no audit. This essentially, I don't want to call it a casino, but it's an unregulated area. But as been mentioned,
casinos have auditors.
Sure. But one of the things is that there were some very sophisticated investors in this who should have been kicking the tires and looking under the hood. Now, and I'm going to assume that they did, but I'm quite surprised they didn't find anything. But that oftentimes is the case when you get into areas of innovation, that the people come in and they lack the expertise to really understand. And this is kind of what happened in the financial crisis. I was back in banking then. And I mean, Alan Greenspan, the head of the Fed, said he didn't understand collateralized debt obligations, the asset-backed securities and stuff. Now, this man's a Princeton PhD in economics. He's a very intelligent man. The idea that he didn't understand those kind of baffles me, but I suspect a lot of people really didn't understand how they would unwind and what events would cause it. And so similar here, you get a situation where I think the people that were even backing this didn't necessarily understand how it worked.
And it appears it's more than, what do you guys make of this call for Gary Gensler to resign? There appears to be some notion of him being attached to FTX and SBF and helping to navigate loopholes. Is that a rumor? Is that false? What do you think?
It's a rumor, and I mean, guess that they've been working with all of the exchanges, so it would be natural for FTX to have a seat at that table when they're discussing the regulation of exchanges and the all of that going forward. I don't know whether the detail has foundation. But it will be fascinating to see that coming out in the wash. It is interesting that FTX did not have any US retail customers, I believe. They'd stayed well away from US retail customers.
What? But there was an FTX US.
There was an FTX US, which was a subsidiary. Yeah.
Yeah.
So was the business model different? Was it governed differently? Like, how is it that it's not roped in to this mess?
It's a bowl of ratatouille. It really is. We don't know whether or not they took money that they held in custody for the benefit of the U.S. people and loaned it to Alameda or loaned it to FTX non-U.S. Why did he have to file in the U.S.? I got to pay for this shit.
Yeah. Where would he otherwise file?
Let him file in the UK.
No, we're not having him. You can have him back.
UK's got its own share of scandals.
But
No, we are all white to the white here. No, you can keep him.
And what's happening with Alameda? Like, what's the Alameda connection? Can you explain that again, Jason?
It's a company under common control with FTX US, FTX non-US, and 128 other companies. So there's this, I got to give a plug out to Caitlin Long. She posted this. I asked her to join. I don't know. It was last minute. She may or may not. I'm going to share my screen so that you can all see this. And it's a summary of, the bankruptcy proceedings. And if you can all see this,
Yeah.
right? FTX Trading Ltd, right? Which is the non-US company, I would assume. Otherwise, it would be incorporated or INC. Announced today that West Realm Shire Services, never heard of that before, Alameda Research, and approximately 130 additional affiliated companies together have commenced voluntary proceedings under Chapter 11 of the United States Bankruptcy Code in the District of Delaware in order to begin an orderly process to review and monetize assets for the benefit of all global stakeholders. And here's the announcement of John Ray, who's been appointed CEO. By whom he was appointed, I don't know. That's not clear. We'll find that out soon enough.
Yeah.
And but Bankman-Fried is going to assist, right? So look, he either does it voluntarily or he gets subpoenaed to dig up the bodies because he knows where only he knows where the bodies are buried.
So
Right.
do you guys, there's one thing for mismanagement, but there's another thing for fraud. Do you guys think fraud is involved here?
I'm
And
gonna stop there.
if so, what type of, like 130 companies seems pretty high, like is
Well,
there?
well, it's clear that the former CEO has misappropriated the funds. Those funds were custodial funds. I mean, it was an exchange. He was to hold those assets on behalf of clients and customers. Instead, he borrowed those assets and utilized them in his business dealings. Now, the question of is that fraud, that's really an issue for a court to decide, but it's definitely some form of malfeasance. Yeah, and that'll complicate matters because the court would be looking to unwind this company. Probably, I would see this as a case of where it goes Chapter 11 to, so that the money cannot be dispersed without the court's oversight. But then it will eventually find its way into Chapter 7 and liquidate. But here you have this additional issue. Now, the thing is that, I mean, if you go back to Enron, there was definitely a fraud there. That you go to like Lehman's, there was allegations and so forth. So that's not unusual that you'll have some kind of questionable activity, but I think that still isn't transparent what exactly he did. I mean, his explanation is he messed up. Yes, I would agree.
I think so. But I mean, Kate, what about the companies that he gave loans to? Like, what?
Yeah, it was Alameda that he gave loans to, and that was so that it could continue its business of trading. And we're not sure about the risk profile of what they were doing. So that will all come out in the wash.
There was loans, and then he was also bailing out, like, didn't he? And also acquired like BlockFi. What was the transaction with BlockFi?
I don't know what the BlockFi connection is, but I know they are closely connected. There is also, if you think about it, they were a very big investor into Solana.
Yeah,
there are other connections all over the crypto world because it was a big company. It's got its fingers in many pies.
Yeah.
Bankruptcy has a habit. And in this case, they're actually building a nest for the regulatory hornets to arrive, right? I would think. Because in a bankruptcy, everything... Look, conduct an audit. You either do it now or you do it in bankruptcy, right? And bankruptcy tends to be more thorough because they need to trace and track every transaction for the benefit of creditors, right? So I would suspect that this is probably going to be, people are going to be blaming regulators. But on the other hand, the very people who are opposed to regulation are the very ones who are destroying the industry that's decrying regulation. I mean, this is going to go in a lot of different directions.
Yeah. And Jason, had investors been using like technology like Auditchain? I mean, maybe you can just speak to where you think going forward, should there be more adoption of Auditchain, what types of things would it be able to prevent? Given,
well, first, we're building an infrastructure. Financial disclosure is just one use case, right?
Yeah.
But if you look at how financial disclosure is constituted as an actual industry and how the players are currently constituted, the average crypto project would not even know what to do. The crypto industry knows less than nothing about financial reporting. If they knew that they knew nothing, that would be something, but they don't, right? But in the traditional world, it's part of life, right? But there are these software vendors that you either have to hire directly, enter into a licensing agreement, or you hire an Edgar agent that does it all for you. So when you're done compiling your financial statements, you then send it off to them. Most CEOs and CFOs don't even care, just so long as it passes the either Edgar filing manual rules or the ESMA filing manual rules. Then your form is accepted, right? And you're live filed. But in our case, there are, I don't know, Tom, you're an expert in this. There's probably what, 200 to 250 standardized rules that you use, controls that you use to compose financial statements and validate them, right?
Yeah, something, I mean, you could have an argument about that, but what I would consider the main fundamental ones, yeah, something like that.
Yeah. So now when you look at the complexity of a financial statement, you can probably do better, right? So
Yes.
we have a few extra rules, more than just a few, and it analyzes, the application of accounting rules, fundamental accounting concept, consistency cross checks, the type and subtype validation, right? All the tags. Did you properly select the right concept, accounting concept, and all these other extra rules that, now you're encroaching on the audit of a financial statement, but you're not interrogating the contents of an accounting system yet, right? But it's all used in the last mile. So in our case, we're the one and only Web3 based financial disclosure infrastructure that's really designed for crypto. It can be used by traditional enterprises, but it's designed and aimed toward crypto because there's 21,000 tokens that flicker on a ticker. Every single one is in constant violation of US securities laws because every single one of those tokens is probably contained in the wallet of a US person, which allows the SEC to assert jurisdiction, right? So what do you do about that? Well, nobody really cares because they were making too much money. They don't listen to me. I'm the last guy they invite to a party. I don't get any invitations because that's all I talk about, right? Lately, my phone's ringing off the hook. My phone's ringing off the hook. I got investors I spoke to a year ago, right over their heads, didn't understand it. Either I'm not communicating it right, or they just know nothing about it. Maybe it's both. But I had a couple call me yesterday. First words out, no hello, no nothing. I saw who was calling. I totally get why you do what you do. I totally get it. So, my email's on fire, my DMs are on fire, my phone is ringing off the hook. But yeah, I mean, look, and Tom can rebut me, right? But, and even Kate, it's as simple as plugging your accounting and related systems into a disclosure control architecture and articulating financial state. I mean, it's so easy, a moron can do it.
And is this for?
I was about to say it's so easy, an accountant can do it, but that was.
And does this apply to both?
This is part of life in the traditional world.
But FTX was considered a private company, right?
Yes.
Yes.
Yeah, but if you were an exchange regulated under the 34 Act or the extraterritorial equivalent, first of all, the fact that you're creating the ability to exchange, the publishing order matching book, and the people who are executing those orders are custodying their assets under the same roof. Custody and trade do not mix. They never have mixed. Yeah. Traditional stock exchanges don't custody anything, right?
So
everything gets cleared away and custodied away. It's just an order matching book.
But for clarity, sorry, go ahead, Kate.
The custody model for decentralized exchanges is a tricky one. I've kept away from anything that was custody decentralized. For that
centralized exchanges.
Yeah, but was it illegal?
Under U.S. law, it's illegal. Everything that happened is illegal under U.S. law. Everything that is happening is illegal under US law. And you know something? This is another thing that really pisses me off. Gary Gensler goes on TV and he tweets and he shakes his finger and he's got a very consistent message. We have 90-year-old public policy that is time-tested. Hire an attorney or come in and talk to us. They're not changing the laws. And the very people that are against what Gary Gensler's consistent messages are the ones that proved that Gary Gensler's right.
So just playing devil's advocate, though. Playing devil's advocate, like they separated the U.S. company. So
U.S. people tunnel in to use FTX International. It's a known fact. Anyone with a VPN connection can open an account, doctor a photo and an ID, and go to town and trade.
And those VCs knew that.
Everybody knows that.
Yeah, it happens in the opposite direction as well. We've had fraud cases in the UK where people's they've been defrauded out of their funds and being tricked into transferring them to accounts that have been set up in the US, funnily enough. So yes, it happens all of the time in all directions, unfortunately.
You know, I keep thinking maybe this could have gone a different way had he provided financial disclosure from the beginning, right? Because sunlight is always the best disinfectant, right? If people who are trading with them didn't like what was being disclosed, they can move their money out, right? And it wouldn't have, maybe it wouldn't have ended like this. And as problematic as, you know, the U.S. regulatory, the 33 Act and the 34 Act can be, I can't believe I'm saying this, but he's right. Gary Gensler's right. And to the average mom and pop who's watching CNBC, who's getting all their education on crypto on CNBC, probably wants to vote for this guy for president. Gary Gensler, that is.
So
And go ahead.
What do you guys think is going to be the fallout, like for the rest of the crypto space as a result of this? Or is this just another Celsius, another Mt. Gox, another?
Celsius had an auditor. NLP was their auditor, which I believe now
what was he doing?
No longer practicing.
In terms of confidence and reputation, it's horrendous because it's yet another. Oh, look, there are more criminals in crypto, and that's a dreadful thing to happen to an industry that is maturing, and it's irresponsible. And I'm really, really annoyed. In terms of direct fallout, a lot of people weren't touching it. And there are, I mean, we've talked about, you know, so BlockFi and maybe, I mean, even Solana, there is a reasonably solid technical base under there that should keep the thing ticking. And they have made a statement that they actually have run rate in dollars and they're comfortable. So reputational, massive. Actual impact, only that which comes from reputation, I suspect.
Well, look.
What do you think, Tom?
I'm hopeful what this does is it flushes out a lot of the bad in the industry, and hopefully it leads the leaders of this industry to come forward and go to the regulators and say, look, I mean, we need some form of regulation. At a minimum, we need to separate the assets from the exchanges. We cannot hold these things together. It's a conflict of interest and leads to bad behavior. So hopefully it's going to lead to something positive. And I'm buoyed a bit by the fact that these cryptos haven't collapsed. They've taken a hit, but they're holding value, and that's encouraging. You know, that's my take.
Mean, in the last 7 days, you know, what, Bitcoin's down 18%, Ethereum 21%, Solana 50%, and I think that's directly as an affiliation with FTX. But you're right in terms, like there's a lot going on beyond FTX collapse, just in general with the market. And
the big challenge that we're going to face, and I do wonder whether Auditchain is in a position to be pivotal in this kind of thing, is that it is very, very hard for a regulator within a single jurisdiction to manage something that is global. Certainly the FCA last year came out and said, look, we can't regulate something like finance. I mean, yes, we have our specific licenses for dealing with UK consumers and so on, but having something that is regulatory, a regulatory tool sitting in the crypto space that can be applied globally, I think is very powerful.
yeah.
You know, the trouble happens on the roof of the base layer. Above the base layer is where humans spin their webs and act the way traditional finance acts, which leads to trouble. But at the base layer, it's 75 and sunny and the weather's beautiful. The people need to understand that, right?
Yeah.
That's the education that the masses are not getting, right? At the base layer, the weather is beautiful. If you take, for instance, when Celsius failed, you know, Celsius did centralized borrowing and lending. They were acting like a bank without being registered as regulated like a bank. However, Compound and Aave, they were fine. And for the masses that might be watching, why is that? Because the collateralization ratio is set through governance. So if you have the governance token, everyone can get together. Somebody makes a proposal to increase the loan to value rate on a specific lending pair. And when the price declines, all of the contracts that extended loans or made loans or what people borrowed gets liquidated. So there is no damage except to the people whose total loan value went down to the point where they got liquidated. But structurally and systemically, the weather was beautiful. It worked perfectly. And it probably should be a model that, you know, they should study in Bern, right?
Yeah.
The Basel III framework only could hope to achieve what decentralized lending and borrowing protocols have achieved, which were built by, you know, computer scientists, not necessarily finance people. Uniswap is another one. JP Morgan, the CFO looks, or even Tom, what does it cost to make 20,000 markets around the world? When you consider custody, middle office, back office, IT, order management systems, and clearing. What does that cost to make 20,000 markets?
I don't know, but it's a big number.
Well, I'll tell you this. Uniswap makes 60,000 markets. They have less than 25 employees. 25. Less. 60,000 markets. Forget about what markets they're making. Systemically and structurally, it's perfect. The weather's beautiful. So decentralized finance has proven to work and solve serious regulatory problems, oversight problems, capital constraint problems, stress test problems, and it's proven to be to work. Scaling it is another story, right? We'll get there. But the point in all this is, you know, at the base layer, the weather's beautiful. It's the webs that humans spin above the base layer that gets everybody into trouble. And it's those people that don't want regulation or don't be too hard on regulation, right?
But I think one thing that Kate said was the challenge is in decentralized finance is how do you regulate it, because there's no such thing as decentralized regulation.
That's
you know,
right.
and that's that's I don't have an answer to that. How do you do this? I mean,
Well, Kate, what would you like to see happen going forward?
Closer cooperation between regulators and yeah, the crypto world is already talking to the regulators. Let's be clear about that. But more realization that crypto is maturing and needs to grow up and own its problems, and that they need to be talking to the grown-ups and getting things right.
So do you think Gary Gensler's right and his point of view?
I'm not going to comment necessarily on what's going on with US regulators, because I'm more close to what's going on with UK.
Yeah.
If you'll excuse me on that one.
I know Jason's like, unfortunately, Gary Gensler's probably going to be right. You've been saying that for a while, right?
No, I haven't been saying that for a while. Let's not get crazy. But
I mean, in the last two
all I'm
podcasts.
saying is that history seems to be showing that the people who are opposed to what Gary Gensler and the SEC stand for are proving Gary Gensler to be right. I'm not saying it. History is telling that story right now. And it really is going to be up to the people who vote every November to vote for politicians who will impose sensible regulation or pick the new people to be appointed as commissioners of the SEC, which the president does, right?
Yeah. Well, on that note, anything else to add? Any more comments? Thomas, Kate?
I think it's going to be an interesting another few days. It's changing hour by hour, and this story is by far not over.
Bankruptcy is a process, and it does not happen very quickly.
It took 14 years for Lehman Brothers.
Yes.
Yeah.
Yes.
And how long was Mt. Gox? It's just this year that's
still going.
Yeah, that's 9 years, and it's still going.
This one is going to be Mt. Gox squared by 50 or 100.
Yeah. Insane.
But there's one thing I do want to say. The average human being doesn't know how to read a financial statement or a financial disclosure document. They don't know what it means when they articulate, affiliate relationships, related party transactions, and the risks that they pose, right? And I think that the time has come, and this may be the watershed moment, where accountants may need to maybe talk to the public about the need for the general public to start understanding what accounting information actually is in a very, very simple way. What's a balance sheet, right? How do you read a balance sheet? The mother of all controls is equity equals assets minus liabilities, right? You start there and then you go down. Otherwise we're going to have to colorize everything. Red is bad. Green is good, right? By the way. But still, it involves the accountants. This whole financial disclosure thing, investors need to demand it. And small investors don't know what it means. And they need to be educated. It's the plumbing of the financial system, crypto or otherwise, and it's the language of business. That's Warren Buffett's. That's not mine. The language of business is accounting.
Yeah.
Well, that's one thing I would point out is the speed of all of this. Something that I've discussed quite a bit with Jason is that, you currently have like quarterly reporting or annual reporting. That's not adequate. It's just not adequate. I mean, this thing moved in what, a week? I mean, you need information on a much more timely, constant basis, and that's and it's
hence the blockchain. That's one of the primary use cases. Is the
real-time. All blockchains articulate changes in financial state on a constant blockwise basis.
Yes.
Right. At this 6 years, I've been at this. Right. Why me? is the question I always ask. Why was I cursed? Why was I cursed with this burden? Trying to get this involved.
It's a turtle in the hair, the turtle in the hair, you know.
Yes. So anyway, enough from me.
Well, Thomas, Egan, and Kate Baucherel, I'd appreciate you guys joining the podcast and adding your point of view, and you're welcome to come back again to On the Brink.
Thank you.
And as usual, Jason, I'll see you on the next one. And for everybody else, thank you for joining us. I hope you add your comments if you're watching us on YouTube, and if you're listening to us on the audio podcast. We will see you next time. Thank you.
Okay.
Thanks,
Thank you.
guys.
Bye.
Ciao.